All right, it gives me great pleasure to bring on board the top management of TCS. TCS has managed to beat market expectations consistently for the third quarter on the trot. All verticals are filing full cylinders. The order book is at an all-time high. Margin, despite the wage hike, also has really ballooned to a multi-year high. So what TCS management has been indicating to us consistently that the Indian IT sector is on a verge of a transformational growth. I think that is getting more and more endorsed by the numbers. So it gives me great pleasure to bring on board Rajesh Gopinathan and NGS, the Chief Operating Officer of India's biggest IT company, TCS. Rajesh, NGS, Happy New Year to both of you and thank you for joining us. What a fantastic way to start a new year, Rajesh. Numbers have been strong. The management commentary has been quite charged up. So Rajesh, last time when we spoke and we discussed why growth is back. Let's now discuss how and how long the momentum will sustain.
Nikunj, in many ways, it's important to go back and see this in perspective. We had spoken to you at length through the course of this pandemic. And as you'll remember, right at the beginning of it, we said that the operating targets that we are working with is to get back to revenue parity by Q3. And I had said that we'll try to achieve rupee level revenue parity on a year-on-year basis by Q3 and constant currency by Q4. And what we have actually delivered is constant currency revenue parity by Q3 and also the margin parity by Q3. So we are operating slightly ahead of the plan that we had shared. And there is, of course, the market was skeptical initially, delighted today. But irrespective of that kind of extreme volatility of pessimism and optimism, I believe what we are witnessing is a fairly long cycle technology upgrade opportunity. And most important aspect is that in multiple levels, whether it is from a technology perspective, whether it is from an operating model perspective, and even more importantly, from our customers' business transformation positioning perspective, we have invested steadily through the cycle and positioned ourselves in a manner in which we are at pole position to participate in this opportunity. So we are very confident when we look at it from a slightly longer horizon perspective. Beyond that, quarter on quarter where it goes, very difficult for us to call. And more importantly, given the return to stability as it were, we will also now stay away from giving too much of forward guidance.
And just Happy New Year to you once again. And just the order book for TCS is at an all-time high, almost nearing $7 billion. There was a double-digit growth in the order book for the year gone by, and even sequentially there is a big uptick in order book. How does one understand the order book momentum in terms of growth? Will it be double-digit, or what we've seen in last couple of quarters is more like a sugar rush which has happened because of the entire because of COVID?
Thank you, Nikunj, and at the outset, let me wish you and your viewers a very happy and healthy New Year. If you look at the last few quarters, we have been consistently delivering, your total contract value in excess of about $6 billion. Right? I think I will attribute this to our proactive investments, innovative and market-leading offerings. It's also an endorsement or an indication of the relative competitiveness that we have in the marketplace. Right? Overall, we are pleased that in this particular quarter, almost every unit, almost every unit of ours, including all the geographies and products and platforms, have shown growth. And not only that they have grown, and it's also a broad-based deal wins. I think out of that $6.8 billion that we have talked about as a TCV, BFSI has contributed about 2.6. North America has done $4 billion. So overall, I think we are very pleased with the momentum that we have, both on the sales side as well as on the deal wins and execution side. And fundamental to this is the fact that the investments that we have made, the vision that Rajesh put about 4 years ago, that we got to become an enterprise agile company by 2020. And I'm pleased to say that we celebrated it in a small way, about the accomplishment of our enterprise agile journey, which is the core of in the core of our SPWS, right? And the spirit of TCS in adopting and adapting to the new situations. And I think we talked about the underestimation of the human potential, the human mindset earlier. But it's been a fantastic journey, to see how people react, how people align, how people really collaborate. Just one way to say is that it's in our DNA, but then to see it in action, starting from basics, commencing in sometime in March, has been truly remarkable and rewarding.
Rajesh, I remember a couple of years ago when Brexit happened, and when we spoke, you said Brexit could be a challenge for the macro and for Indian IT companies. But Brexit has happened, and despite that, the European business for the quarter gone by is firing full cylinders. Since you've not used the word Brexit at all in your commentary and in your analyst call, I'm assuming Brexit is not an issue?
Nikunj, in fact, as I've always maintained, we have always believed in staying very close to our customers and focusing on the customer and their requirement rather than the macro. But having said that, UK is a volatile environment, both economically and from a health perspective. So we need to be very aware of that situation, but leave aside short-term impact. I think from a medium to long term, we are very well positioned. We are the largest technology provider there and the most fastest growing. So that positions us very well to be a growth and transformation partner to enterprises in UK across industries.
Rajesh, TCS is generating a lot of cash, and at the press conference, you again alluded to the fact that the cash generation, because growth is so high, is at an all-time high. You've done buybacks in the past to create shareholder value. Your dividend policy is out in the open. But since your business does not require too much of investment, are you strategically looking at deploying the cash differently?
Nikunj, we have never avoided thinking about inorganic. As I said, we are very active in terms of deal evaluation. But our focus always has been to find the right asset at the right price point. But that's as far as buying out enterprises is concerned. There is a larger opportunity to continuously invest in upgrading our own skills across a spectrum, whether it is technology skills or it is these operating model transformations that NGS spoke about and has been championing internally. Whether it is opening up new markets like our investments that we are now doing in Germany and in other parts of Europe, opening up Japan and many such markets. See, a very interesting data point, the US has I believe for the first time broken below 50% of our revenue mix. So that's significantly de-risking the business model by expanding into newer markets and being still able to do it profitably. So we are probably the most consistent and systematic in our investment plan. Just that we don't do that in a manner in which it interests investment banker interest.
NGS, now 2020 was a year where collaboration happened, new work at home processes were put into place, growth and business and relevance has come back. Will 2021 be a year of a different kind of a growth for TCS, which is on margin expansion, on big productivity gains?
I think there is hope that with vaccines, etc., out, there's hope that people back to normal. Number one. I believe that the vision that we have set out in terms of 25 by 25 operating model will play out. and we are hoping that we will have some of the coming back to offices, and whatever they are missing out by not coming to offices, right, and is something that is realized. But overall, I feel that the deal momentum that we have, and it will be, there's a significant opportunity for us to completely leapfrog from where we are. Right? Opportunity that we see in terms of the multi-year investment cycle that Rajesh articulated. I think there is a significant opportunity to leapfrog and move from there, both in terms of revenue as well as margin expansion.
If I take a leaf from your answer, can you define leapfrog? Because the minute you say leapfrog, and when you say you expect margins to do a leapfrog, which means that on a 26% margin, what you've reported for the quarter gone by, you expect margins to substantially move higher.
I think so. I think, we are in a place where we are happy where we are. I think we'll have a good exit rate when we finish Q4. And from there, I think we feel reasonably confident that we will achieve a double-digit growth from for the coming financial year. And all that augurs well for TCS, number one. But two is that the recent investments that we have made in terms of forming the distinctive cloud units for all the hyperscalers, plus the launch of the Cognix platform, which is actually bringing in multiple technologies together, which is bringing in, we always talked about IT, BPS synergy. I think Cognix makes it as a reality. And then from there, I think, if you really look at it, it will drive productivity, it will drive self-healing, it will drive self-learning. And all that augurs well for creating growth, efficiency, innovation, all at the same time.
On one side, markets have been delighted and surprised with the positive growth TCS has reported. The P multiple now stands at 30. But the challenge is that as we look into the future, given that double-digit growth is back, there is a case that it may also go beyond FY22. Where do you think the positive surprise could come from?
I think, Nikunj, actually the opportunity is beyond that. I want to use this to delve a bit into it. See, we always keep on, every time there's a technology change, there is a lot of, soul searching that, okay, this time it's the end. And the understanding of what we are as a company, I think is very narrowly focused from a very small lens of either just linear growth or a given technology at any given point in time, what the technology flavor is. The real strength of the company is the relationship that we have with our customers and the consistent ability to keep on investing in our own people so that they are always current with whatever the new technology is. And we have proven this again and again through multiple cycles, but the conversation doesn't move forward. I think the real opportunity is to start thinking of us in a slightly more broad-based way as to how are we participating across the value chain with our customers? How are we deepening our relationship with our customers? In our December discussion, I told you that less than 20% of our relationships are truly holistic. And that's the opportunity. And we are very systematically investing on it. So we believe in this strongly, as you know, we have spoken about it many times. And we have backed our beliefs. So it is really about building on our own beliefs and investing on areas irrespective of what the market at any point in time thinks. So we've been very consistent in backing our strong beliefs, in being very purpose-led in our approach, being very systematic in ensuring that we have a sustainable operating model by being able to continuously reinvest in our own people. And our customers respect us for that. They see in us a truly strategic provider who itself will remain current across cycles and therefore will allow the customer to remain current across cycles rather than each time thinking about which is the new vendor for a new technology. And this ability, right, this purpose-led backing of innovation, backing of contextual knowledge, I think that is what differentiates us and generates the multi-year visibility that we are talking about. So in that context, many times, whether the period-to-period growth is up a few percentage points or low few percentage points, that's not the metric. The metric is how sustainable is this business model? How resilient is this business model? How different is this business strategy compared to a very wide spectrum of people out there? And I believe that we have demonstrated it. And in many ways, the market respects us, respects that differentiation, which is why we consistently maintain the premium.
So Rajesh, as a policy, you will not give me a numerical guidance, but when we are talking about double-digit growth, are you only restricting yourself to the next year? Because next year the base effect would kick in. Or you think your view of double-digit growth for TCS, or for that matter for the IT industry, can go beyond FY22? It can go for a couple of years.
Let me put it this way. There is no iota of doubt that that's what we're going for. Whether we will achieve it or not, we will know as we get closer to the end point. But whether it is me or NGS or any of our business leaders, down to the last account manager, there is absolutely no doubt in our mind that that's what we're going for. Now, the rest of the stakeholders will have to take their bets. You can bet on us or bet against us, but we are going for it.
So, NGS, there are two ways a company or a business grows. One, the market share or the addressable market share increases, and you start gaining more market share from competition. So what is the likely scenario for TCS, both or the first?
Absolutely. I think, going after new markets as well as protecting our market share and increasing our share in the existing segments that we play are both our conscious strategies and conscious operational metrics on which, every one of our client partners, account managers, and business heads work on and continue to deliver. Right? I'm pleased to say that, look, as we always maintain, we have about 1,000 clients, and each one of these clients, I think, we have increased market share in the last 4 quarters. If you look at it, we have increased our market share, our share of wallet in each one of this, and also participate in the opportunities, whether it is, efficiency based or whether it is growth and transformation based. I think that twin engines positioning that we have gone to market with is something that is very unique, coupled with all the products that we have put on the shelf, right? Whether it is cloud, whether it is digital, whether it is analytics, all of them coming together to gain market share, right? Whether it is in terms of new markets, in terms of new client segments that we are going after, as well as existing clients' market share. And also, consistently we have gone after creating products and platforms and then see how we can create stickiness over the long term, whether it is the insurance platform that we talked about, the retirement services, or the payment side of it, or the core banking cloud that we talked about. Each one of them is taking. And the products like Ignio, Cognix, and a few others, are creating a beautiful entry strategy for us. For customers who are already have, I have a crowded list of vendors. I don't want to have one more in TCS. TCS, please stay out. And when we go and show them an Ignio, when we go and show them a differentiation with our products, and they say, come on in, right? Yeah. I think, there is a multiple angles in which we attack this particular factor of gaining market share and going after new clients and new markets in which.
Well, Rajesh, NGS, gentlemen, once again, great numbers, fantastic. The P multiple, well, investors cannot complain. When the perception of the company changes and when the volatility in the number starts getting more and more clearer, I think the P multiples expand, and that's what happened with a stock like TCS, which is now at a commanding P multiple of about 30 plus. Let me also bring on board the CFO, Ramki, and the head of HR, Milind Lakkad, to talk about the basic fine print and in terms of visa, utilization rate and other aspects of work at home. Gentlemen, happy new year to both of you and thank you for joining us. Ramki, margins was a standout feature, 26% plus despite wage hike.
I think, yes, it was definitely very heartening to see that, but it has come about because of number of things. One, I think growth had been on across all the verticals. We had growth. So obviously, when there is growth, there is also a margin pickup. We had explained it in multiple occasions in the past as well. Second, of course, currency did not had a big impact either way. Third is, I think there is also the benefit of a fungible talent pool, which is, we are able to leverage that wherever people are located. And also during these times, actually, our utilization, productivity, all of it has also increased. And more importantly, across other items, wherever cost, we have been, as usual, trying to execute it as efficiently as possible and drive those cost efficiencies. So all of it has come together. Also very disciplined on the deal and deal execution as well. So I think they have all come together and that's the result which you're seeing.
But Ramki, the challenge is that for 2021, is everything at its peak? Margins, utilization rate, benefits of SG&A. So where will the operating leverage kick in, Ramki?
No, I don't think we can say it has reached a peak. There will always be opportunities for driving efficiencies and at least to ensure that there are no inefficiencies in the system, whether it is in utilization or how we use the what is available. But more important is, I think we will also be conscious of that, we will not let go of market opportunities. So if we have to drive in terms of execution, if we have to spend, we'll spend, or we have to invest, we'll invest. So it's a question of optimizing, but I wouldn't say that everything is peaked. So we can still drive things.
Right. Milind, 2021 was an incredible year for Indian IT sector. The entire model has shifted to work from home. When things will be back in 2021, how will the environment change? How will things change on the wage front? How will things normalize? What is your definition of normal in 2021?
Thanks, Nikunj. I think this year was an exception year for all of us, right? And we expect the next year to be normal year. And when I say that, everything has to come back to normal. We'll make a decision on whether we're going to give hikes on April 1st. Is something around in the March timeframe. We'll decide that. And so I expect a normal year and everything comes back to normalcy.
All of you are using words like optimistic, multi-year trend, visibility. How come there is no big mention of change in margins? Because if the circumstances, if the environment, if the business, if the visibility, if the dominance, if all those factors are changing, will margins also go higher, like the business and like the trajectory, and because of the factors which are at play?
I think we have already have the highest in the industry, right? So number one. Number two, I think we look at relationships more important, and we work where what we offer and provide to customers is meaningful, right? So margin is part of that. The realizations, the pricing, all of it is part of that equation. But one can't be, if you're so opportunistic saying, oh, okay, demand has come back, so now raise prices. So this is not a very price inelastic industry, right? So it is important, but one can't easily conclude saying that, everything is firing, so now all your pricing should go up and your margin should go up. I don't think one can look at it. But at the same time, we have to realize the true value for the true pricing for the value which is delivered, and that is an active pursuit which we do depending on the opportunity and the deals, and that will continue to be there. It is not that one should compromise one for the other.
And there is a more than 10% jump in the order book. What does this mean for the company in terms of leverage, billing rates, and other factors?
Yeah, see, I think a part of it is always our ability to execute well has always been a driver for our margins, right? So there is a position when we go in, when we sign the deal, right? But after that, in terms of execution, how smartly and how efficiently you execute and derive the benefits has been one of the big factors for us. There are a number of things. There is a technology, there is the training, the methodologies that you use, the benefit that we get from our own research and innovation. So a number of things come to play. And there, you're right, the larger deals, scale deals, you have even more opportunities to drive some of those efficiencies. You may not succeed in all cases, but in vast majority cases, you will be able to do it. And that has been one of our strengths over the years. And we'll continue to work on that and to enhance it further.
Milind, given that the business has suddenly come back and deal and mega and large order books have clearly started, do you see a situation where utilization rates for 2021 could really be dramatically different?
We actually have significantly, reimagined our HR supply chain during this pandemic. I'll just give you a couple of examples. When we started basically engaging with the candidates from their 7th semester onwards, and 80 means by the time they joined us, 85% of them were project ready on day one. So engaging with associates even before they join is one of the very, very key element of our strategy, which actually has significantly, lot more than what it has to be earlier. That is one significant element. Our overall ecosystem, talent ecosystem, is also strengthened quite a bit over the last 18 months. We have been continuously driving, talent contests and everything else around it, and have a very strong pool of talent available very readily and coming at a very short period of time. So, and that is true across geographies. When I talk about US now, in the US we already hired the number of trainees in the last 3 quarters is equal to the number of trainees we had last year, fully. So we actually driving, pushing through all cylinders, and it is kicking in. So I don't see a challenge in driving supply to meet this demand at all. We're just getting more and more efficient at it, and we'll continue.
Right. Milind, the number of employee addition historically has been used as an indication of how much TCS is growing. Now, at a time when automation, AI, and other factors are at play, how should one read into the net hiring and the gross hiring of TCS going forward?
I believe so, which will miss. Obviously, automation is playing a significant role in our industry, so that definitely has an impact. But at the same time, the volume, the demand is going up. So overall, if you try and bring out all these things together, we'll end up, let's say, by getting the similar number of trainees in the coming year as we had in the last year, right? the kind of skills we'll get to have those new requirements, whether it's AI, ML, machine learning, or some other new stuff, are also getting significantly coming in from a lateral hiring. So, it's not only the quantity, also the kind of talent which is coming in is also, kind of training we are giving is also changing significantly.
All right, gentlemen, thank you. We'll leave it there. Great speaking with you this morning here on ET Now.